Yvonne, today it seems like the mood a little bit better here in Asia. Is it still too early, though, to say we're out of the woods?
Far too early, actually. The knife is still falling. It's still very much a de-risking and diversification story, at least from the advice and guidance that we're sharing with clients. There is still substantial uncertainty, as you made clear in your comments. And for as long as that exists, and for as long as I think we see concern over the policy reaction, it's far too soon to call an end to this crisis. Although I would make one point. Increasingly, I am of the view that the worst of the damage is behind us. Thank you.
What makes you say that?
Well, just simply by the scale and scope of the drawdown that we're seeing so far in, for example, the United States. I mean, I'm sure that the volatility that we've seen in the markets over the last week or so happens only once or twice in a generation. The drawdown, for example, explicitly last night, suggests to me the markets are pricing in very rapidly the damage, both at the economic level and I guess at the broad public health level, that this supply shock and this rapidly evolving demand shock is having. How low the markets will actually fall, I'm less than certain. As I say, there's a lack of clarity on the potential damage that exists. But I am of the view that the drawdown that we've seen thus far is probably the worst behind us.
And obviously, we saw quite a bit of central bank action. There's some that are kind of sticking their necks out there and saying that this Fed emergency move on Sunday actually failed. Does that resonate with you in any way, or was it enough to actually at least stabilize the liquidity issues we've been seeing?
Well, I think you're absolutely right. There was a funding squeeze globally as essentially disruption caused by the virus impacted global payments and more broadly the functioning of trade and business around supply chains. We saw multiple corporates, particularly in the United States, seeking to draw down their standby loan facilities, and this caused a substantial amount of stress in the interbank markets. As a consequence, we saw liquidity tighten, and the Fed was obliged to step in and address that challenge. So, whilst the market reaction to the easing and QE may not have been particularly positive, nevertheless, the funding stress, I think, has been addressed, actually in quite a profoundly meaningful way. And on that basis, I think it has been a success. And just to add, in certain ways and in certain levels of scale and scope, central banks all around the world will be essentially offering the same sort of liquidity provision as the Fed.
John, if a lot of comparisons are being made to the global financial crisis, and back then, the trigger for the global economy to freeze up was because you had a credit crunch as well. This time, it seems that governments themselves, because they're shutting their economies essentially unilaterally, it seems that the global economy is freezing to a lesser extent on its own. My question is there a risk that markets are using the global financial crisis order of events and applying that here, and then the risk is coming up with the wrong conclusions?
Well, David, I think absolutely your comparison with the GFC is correct. We are in a trough, I think, both in economic and market terms, of a similar magnitude and intensity to that we witnessed in 2008. I actually think at an economic level, the impact is worse. I actually think that the shock caused by, the supply shock and demand shock caused by the virus and compounded by the oil situation presents a far greater challenge to the global economy. We've already seen, particularly from China, the economic damage this is creating. Why I think financials, for example, have sold off so aggressively in the last couple of weeks is because the market is afraid that the combined impact of the oil shock, of the virus shock, could feed over to the financial space and exert additional pressure on perhaps less solvent and less robust financial institutions. And to me, that transmission risk, I think, is eminently logical and sensible. So I think more broadly, we are seeing a confluence of concerns, which is why the capitulation, frankly, that we've been seeing in equity markets is so intense and so apparent.